The U.S. is getting a big new player in air travel. Frontier Airlines and Spirit Airlines have agreed to merge in a $2.9 billion deal that will create the fifth largest U.S. carrier. The two companies expect the cash and stock deal to help accelerate investment and take on traditional champions like United and American Airlines. It's expected to create 10,000 jobs by 2026 and deliver $1 billion in annual savings. Frontier will be in the driver's seat, owning just over a half of the combined entity. The announcement comes as major U.S. carriers look forward to a profitable 2022. Flight demand has rebounded as economies reopen and lockdowns ease. For now, there's no name for the new company. Both airlines operate Airbus jets, easing the challenge of integrating their two fleets.
Shares of Peloton shifted into higher gear on Monday, soaring more than 20% after reports Amazon and Nike were interested in taking over the exercise bike maker, which recently lost a majority of its stock gains made during the health crisis. A source told Reuters on Friday that Amazon is exploring an offer for Peloton, while the Financial Times reported Nike was weighing a bid. Amazon, Nike, and Peloton did not immediately respond to a request for comment. The potential offers come at a time Peloton's shares are trading near two-year lows, down over 84% in the past year, as demand for its stay-at-home exercise equipment faded faster than expected due to easing health restrictions. Peloton said last month it was reviewing the size of its workforce and, quote, resetting production levels, which sent shares pedaling downhill. It's slated to report second quarter results on Tuesday.
Hasbro easily beat analyst estimates in the fourth quarter. Total revenue was up 17% to just over $2 billion in the fourth quarter, beating estimates of $1.87 billion. Price increases to help cope with supply chain problems helped the toy maker. Another factor was a recovery in its television production business. The Monopoly maker delivered new episodes of the Showtime series Yellow Jackets and released a new Clifford the Big Red Dog movie. It saw revenue in its entertainment business jump 54%. Hasbro has focused on trying to generate more money from TV shows, movies, and video games. Like rival Mattel, it wants to be a broader entertainment company rather than just a toy maker. Now the latest numbers are a big jump on a year before, when the firm was hit by production shutdowns as a result of the global health crisis. The return of Marvel superhero movies last year was another key source of earnings for the consumer products unit. Revenue there was up 9% in Q4 on demand for toys based on film characters. Looking ahead, the company expects 2022 revenue to rise at a low single-digit rate.
U.S. officials called on Monday for, quote, concrete action from China to make good on promises Beijing made to buy $200 billion worth of U.S. goods. The purchases were supposed to have happened in 2020 and 2021 as part of a so-called Phase 1 trade deal signed by former President Donald Trump. The officials said Washington was losing patience with Beijing, which had, quote, not shown real signs in recent months that it would close the gap in the 2-year purchase commitments that expired at the end of last year. A spokesperson for China's foreign ministry responded on Monday, saying the two sides should work together to resolve conflicts.
The essence of China-US economic and trade relations is achieving mutual benefit and win-win results. And there are no winners from a trade war.
The agreement, signed by former President Trump in January 2020, diffused a nearly 3-year trade war between the world's two largest economies. But the U.S. has since repeatedly called on China to deliver on its promises. Here's U.S. Trade Representative Catherine Tai in October.
These are commitments that China made. They are commitments that our businesses and workers in certain sectors have looked to. We will have to address where this relationship goes from this starting point.
Monday's comments come a day before the U.S. government is due to release full-year trade data that analysts expect to show a significant shortfall in China's pledge to increase purchases of U.S. farm and manufactured goods, energy, and services.
Wall Street ended lower on Monday, with the major indexes falling off a cliff in the final hour of the session, reflecting uncertainty ahead of key U.S. inflation data later this week. The Dow finished exactly flat, while the S&P fell slightly and the Nasdaq closed down more than 0.5%. Adam Coons, a portfolio manager at Winthrop Capital Management, said that while he thinks inflation has peaked, Thursday's consumer price index data is still very much in focus for investors.
It's going to be a lot like the jobs number, where if it surprises to the upside, then I think we'll see a market decline, because that's going to further push this narrative that the Fed's going to be more aggressive than maybe what some think. If we see the CPI number decline, I think markets overall will brush it off. Really, the big risk is if the number comes, much over the expectations.
Shares of Facebook owner Meta Platforms fell again, finishing down more than 5%, adding to losses after its bleak forecast last week and a market cap loss of more than $200 billion. Peloton soared nearly 21% following reports that Amazon and Nike are exploring potential buyout offers for the exercise bike maker, though several analysts wondered if it was a good fit for either company. Shares of Tyson Foods also popped after the meatpacker's first quarter profit nearly doubled and surged past estimates on the back of higher prices. And finally, Spirit Airlines jumped after announcing plans to join Frontier Group to create the fifth largest U.S. airline in a $2.9 billion tie-up, lifting the S&P's airline index.